For over the past year, we haven't had a dull moment in the markets. This week is no different as we have some important data points we need to talk about for Bitcoin and some very important events happening on the macro level that you also need to know about. Now, the first thing I want to start with is Bitcoin specifically. As you can see, these are all of the massive asset managers that are coming into the space, the institutional investors. And when you total all of them up, their assets under management, you can see that it totals to over $27 trillion. Now, not all of that money is going to come into the space or just into Bitcoin, but a large sum of that will, as a lot of the assets that are going to get allocated to Bitcoin, I mean, just even 1% of this is going to almost double or triple Bitcoin's market cap, which is absolutely insane. On top of that, if we look at the weekly inflows, mainly into Bitcoin in the crypto space, you could see that it went all the way up to $200 million this week alone, basically correcting almost half of the prior 9 consecutive weeks of outflows, as you could see here. So we are starting to get that shift and more money being pushed into Bitcoin. Now, of course, it's very important to note that a lot of this sentiment does not trickle into the rest of the crypto community. It's mainly focused on Bitcoin. Now, on top of this, we've already known that Fidelity wants to basically push a spot ETF, but a lot of that was just rumor. And as of today, they were asked if they can basically talk a little bit more about that. While they said they can't comment on it, back in 2021, they actually got a spot ETF rejected by the SEC, but now that BlackRock is leading it, as soon as that one gets approved, or as soon as the SEC basically shows that, hey, we could be doing this, Fidelity is going to be next in line in terms of getting their spot ETF approved. And it is really looking like the SEC is looking a little more allowing as they pass their first ever leveraged futures ETF that goes live today. So with all of that, that leads us into Bitcoin's price. And I want to talk a little bit about what 2019 looked like and why it could be so similar to what the price might look like in 2023. Now, one thing that I think we need to understand is that when we look at the current Bitcoin price as it sits right now, you could see that it is struggling here at the $31,000 level. A reason for this is because, one, that's where a lot of liquidity was. If you look back to the left, we had price action stop there over here. And obviously, when we were collapsing in 2022, a lot of price action was here, which means there was a lot of money left over, or there is a lot of money at these price levels. Now, one thing I want to point your eye to is the similarities between 2019 so far to today's price and what could happen in the next 6 to 8 months. And the first thing is, obviously, after this bear market, Bitcoin's price absolutely tumbled. That's basically what we are seeing right here in terms of Bitcoin's price. After we reached our all-time highs, we continued to fall down in terms of price. Now, the next thing that happened is that Bitcoin bottomed. In 2019, it bottomed to around $3,000. What we saw over here was we had a massive sell-off similar to 2019, but this bottomed all the way to around the price of 16,000, let's say. So the similarities right there are basically identical. The next thing that happened is that for the next few months, we kind of had, let's say, this bear market rally where in terms of this price, we went up just around 300%. Obviously, today's price, we're not going to go up 300% because of the diminishing returns and in terms of price action. But since this low, we have over doubled in price, going up 102%. So far, the similarities, again, are identical. Another important thing is that we topped out right around here at the $12,000 mark. This is where Bitcoin's price basically stopped just 8 months before the halving. And look exactly where we are in this point. If we go over here, if you look at the bottom, you can see that this is during the last weeks of June, which is exactly where we are sitting 4 years later. We are also topping out at the price of 30,000 in the last few weeks of June, or at the last week of June. Now let's take a look at what happened to Bitcoin's price. It basically consolidated and continued to fall until the Bitcoin halving, which is indicated by this blue line. Now, to get the exact time range, if we go from the last week of June to over here, you could see that it took around 294 days, or basically 42 weeks. If we take the date to where we're at right now and we basically extend it out to the Bitcoin halving, it's about the same, give or take a couple of weeks. As you can see right here, 44 weeks compared to 42 weeks. Now, the last thing that I want to show you, the similarity, is that if we take the bars from 2019 and basically put them into 2023, you'll see how similar, or the possibility of what could happen to Bitcoin's price. Now, if we overlay this over here, This is honestly, to my technical analysis, what I think the rest of 2023 will look like. Obviously, we could go a little bit higher. Maybe it's not identical, but I really don't see Bitcoin going over 35K and sustaining that price until the Bitcoin halving comes, which again coincides with what we could see over here. So in terms of price action, I honestly think this is what we could be seeing for the rest of the year. Another very important thing we need to remember is that while yes, we are going through kind of like this economic uncertainty and the markets aren't doing so well, it's important to remember that Bitcoin is correlating less and less and less with tech equities as of recently. Basically, since the start of the year, Bitcoin was basically moving how the NASDAQ was moving at over 60% in terms of correlation. As we sit right now, it's almost the opposite, basically showing no correlation whatsoever. And as more institutional investors and more people in general start to flock to Bitcoin because they see it as a safe haven for this upcoming recession, we can continue to see Bitcoin basically trade the opposite or have no correlation to the stock market, which is a very important thing because if we look at the stock market, you could see that it is currently in an extreme overvaluation. Basically, it hasn't been overvalued like this since the post-pandemic when we had our all-time highs, and then we had the bear market, and also if you date all the way back to around 1999. So this is very important to remember because while the stock market is being extremely overvalued, typically at these points, this is where massive sell-offs come, and with the economic uncertainty following, that's my personal view, is that I think we could see massive sell-offs start to come, and we can maybe even get to these lows or basically the pre-pandemic highs. I personally think that we are going to make or at least reach the lows that we've seen in 2022. Now, in terms of just focusing on the market, that's everything I have for that side of the video. But now as we look into the rest of the week, you can see that we have some very important things for the Fed and macroeconomics. As of today, I'm pretty sure it's already happened, new home sales data has come out. Now, this is very important on the economic side because as the housing market is a huge dictator in terms of how is the US economy doing. Now, on Wednesday, we have the Fed bank stress test. This is basically saying if the Fed raises interest rates, what's going to happen to the banks? What's their liquidity looking like? What's their balance sheet looking like? Are they able to basically survive without another banking collapse happening? And now, as far as Thursday and Friday go, this is going to direct the Fed in terms of how are they doing with the US economy, what's the health of it, and can we continue to raise interest rates? Because again, remember, their number one goal is to bring inflation down. And on Friday, we are getting the price consumer inflation data, which is basically showing us where is inflation. And if it's not dropping as fast as they'd like it to their 2% target, again, their main goal is going to be raise interest rates until inflation comes down. And they're going to continue to do this until either inflation breaks or the economy breaks. And as of right now, the gauge in terms of the economy is the labor market. As long as unemployment is low, sitting below 4%, and inflation sitting at 4%, they're going to continue to raise interest rates, which is not good for the markets. It's not good for overall global liquidity, and it's just not good in terms of the US economy's health. That's everything I have for this video. I hope you guys found some value. If you do want to stay up to date, make sure to subscribe and continue to watch these videos as I keep you updated as everything unfolds. Till the next one, see you guys then.